it's Gail with Traders Help Desk. I just wanted to go over the Nasdaq trade that I did today. I did one future contract and then I did a 20-minute binary on it. But it highlights the reason why I tell you to look at your higher time frames. You can see the market was overextended and we had trend divergence on the stochastics. That means as price was making lower lows, stochastics was making higher lows, followed by this really strong reversal bar. Now that's what interests me because it said that we should go up today. So it came back and it tested this ATR right here. And number one, you can see the ATR is just flatlining, okay? And we formed what I call a pin bar, which I went over in the Nadex webinar this week. We also had trend divergence. As this was making lows, the stochastics was making higher lows. So I entered right at the ATR. I had an order sitting there. It did come back and tried to test that low right here. Did not go lower, still gave us a higher value in the stochastics. And of course that kicks off this up move. Now, some of you may have been worried because the 45-minute and I think the 180 was overextended. But markets can remain overextended for a length of period. And so I didn't let that phase me on this particular trade. Now, the entry was at 65.92.75. I closed the position here when I saw that the stochastics was overextended. I don't care about getting out at the top. What I care about is trying to increase my risk to reward. And on this particular trade, I got about 1 to 2. And again, I had traded the 20-minute binary as well as the futures, thinking indeed it would go up. Now, if it had broken through this 65.81 area, then I would have closed the position. Remember, this is the 12-minute. The white is the 3-minute. The blue is the 12-minute. The red is the 45-minute. So this just allowed me to see everything that was going on a multiple time frame basis.